Good afternoon, everyone, and welcome back. This is Daily Trade Analysis with a quick market update for today, December 20th. Today, we got building permits preliminary for November. We were expecting 1.5 million almost, coming from the previous 1.51, and we got way lower than expected, 1.342 million. And that was good news, but housing starts came higher than expected. We were expecting a slightly decrease from 1.4 to 1.43 to 1.4 million, and we got 1.43 also, almost. So housing starts are increasing, but building permits are decreasing. So I think a lot of the houses that got already permits are starting to build, but I think there's no one, actually a lot of less people claiming requesting building permits. So at the end of the day, this is good news in my opinion, despite the fact that housing starts are higher than expected. Building permits are the first thing that is before housing starts. So building permits going lower is good for the Feds, for the hawkish Jerome Powell. In the eyes of the Feds, I think this is good news for the housing markets to cool off. Apart from that, Elon Musk is actively searching for a new Twitter CEO. So I think this is good news for the traders and investors that are worried that Elon Musk is too busy with Twitter instead of focusing on Tesla. We will be reviewing Tesla performance is not good. I'm already telling you, but I think for the long term this is good for Tesla because Elon Musk going back to focus on Tesla instead of Twitter, I think it's good for the long term of Tesla, and we might see a bounce, and we might see some bullishness coming back for Twitter. What else? Europe agreed finally to limit gas prices. Some analysts are skeptical, but I think 180 euros per megawatt hour is nice. And more than that, in winter is coming, so having this cap on the gas prices is going to be good for families and people already feeling the pain with the interest rates. This gas price cap is going to help a lot. For 2023, we will see, but I think the prices are going to stabilize around 6, and we will be reviewing that later in the charts. And apart from that, I think that's all regarding news. Let's see how the market reacted to that. This is the NQ 2-hour chart time frame. As you can see, we are trending lower quite heavily, downtrend, and I was looking to go long today of this trend, but as you can see, we got rejected. Quite a hard rejection. I could get some nice long scalps, but with this nice breakout, but this is the open, so we got lower. We didn't break pre-market pivot. We bounced off that level and we broke high of day. We did a nice bull flag and we tried to get 11,236. I had these levels on the 30-minute chart. This level was yesterday's pivot at 11,232. We rejected that. We rejected the trend line, and right now looks like I stopped the trading up here, and looks like we gave up part of the profits of the day. We bounced from 11,100 and we are now trying again to break that trend line. RSI is looking good, volume is looking quite low, but we will see. This is something that I was expecting. Right now, NQ is 0.02, almost flat. S&P is at 2.21. But part of the reason I was looking for longs is because the daily is quite oversold. 1, 2, 3, 4, 5 days in a row finishing red. I think some kind of relief and bull rally was expected, but I expected way more. That doesn't mean that I am bullish on the overall move, the overall Nasdaq. I still think we are going to see lower pricing at the end of the year. This low right here at 11,000 is quite the target for short sellers. But apart from that, today I think we can see some moves to the upside, but don't get me wrong, don't get too confident. This is just most probably shorts taking profits after a good 5 days of streak. So Apple was part of the reason why it was pushing up after news about Vietnam having and Foxconn agreeing on 2023 around May to start building MacBook. So that was a nice relief, but as you can see, we are just topping at this level, quite clear. But it was a nice move, and Apple was pushing the market throughout the day, and again today it's pushing the Nasdaq. Right now 0.12. Microsoft also quite strong, chopping around more than Apple, but is looking nicely. Look at this. This daily level is being respected. We are bouncing off that, so bulls are committing to this possible support. We will see. Below that, we have this gap that we have still to fill on Microsoft, but overall, Microsoft is looking quite strong. Tesla, well, looks like Tesla stakeholders are not happy with the news. I was hoping for a nice bull day, green day for Tesla after that news, but let me tell you, this is looking pretty bad. This is already happening. We are filling this gap on 1 year ago, no, 2 years ago, around 139. And after that, I think this is quite interesting. 120 and 130. 120 is this July 20 level that started the overall bullishness of all these 2 years on Tesla. So we are at critical level that looks like we are missing, we are not holding. So watch out on Tesla. I was bullish on it after Elon Musk said that he's looking for a new Twitter CEO, but looks like investors are not happy with that, or at least they want a lower price. So don't get too confident. Amazon is testing these lows and March 2020 lows. Also, valuation compression on Amazon. Consumer discretionary is feeling the pain. XLY is minus 0.8 on the day. Look at this. We are starting to see a lot of demand destruction. This is the new fear. This is not inflation. This is recession. And I think we can see Amazon at 120 for sure. Right now is 13 points above that level, touching the pre-pandemic levels right now and losing those levels. Interesting. Let's change from the Nasdaq stocks to more sector funds. XLK is having a relief about 0.30% on the day. It was about time to do this, honestly. Look at this gap. Look at this gap. Huge gap that we have since early November, and we are about to fill that gap. So I expect some kind of a bounce at these levels, but I don't know if we are going to test these lows. If we test these lows, it's because the overall Nasdaq is pretty weak. So financials are also feeling the pain. All sectors overall, apart from the defensive ones, the big ones, the ones that you want to be green, are feeling the pain of recession, and they are somehow trying to find some support after some bad days. This is financials. If you start to see financial sector red, this is worrisome. This is more concerning that seeing other sectors. If financial is red, prepare yourself. Utilities and energy are green on the day. This energy, I don't know why, because natural gas is feeling the pain of the Europe natural gas price cap, and crude oil is minus 1% on the day on demand destruction concerns. So I don't know why XLE is having almost 1% on the green. So I will have to check for later. But utilities is in the green, staples almost flat, and healthcare is in the green. So again, defensive sectors are green. So the move from Wall Street is quite clear. They are going defensive for the end of the year. So don't expect big moves to the upside. Don't start thinking, okay, this is a new bottom, a new high low, let's jump in. Just take a look at these signals, because as you can see, XLY versus XLP, consumer discretionary versus staples. We are feeling the pain on consumer discretionary. People are still super worried and has a lot of fear about recession, and this is not good. So a lot of people, big money is moving to defensive, and that's why you see utilities, staples, defensive sectors, healthcare going green. Let's end with the dollar. Dollar is trying to build some kind of support around this 103 level that we had in summer this year. Right now, still going lower, below the 200 moving averages. A lot of weakness in the dollar. So dollar is not the good, huge, awesome, great trade that we had in almost the entire year until now. So we are seeing a lot of weakness, continuing lower, and dollar is starting to weaken because overall the world's economy, other central banks are starting to do some move for interest rate hikes, and that's why dollar is starting to pull back. Yields 2-year is in the green, and also the 10-year. Watch out. 10-year is 2.73% in the green. Not as good as the 2-year, and that's why if we check the 2-year, the 10-year minus the 2-year, this yield curve, this is getting a nice push to the upside. This is good because in the long term, we already know that Federal Reserve is going to be at 5% terminal rate more or less all the 2023, but for the long-term yields, people are starting to see the end of the tunnel, the light at the end of the tunnel. So we are starting to see the 10-year going green again. But if we check the short term, look at this. This is almost 374% in the red. Look at this. This is the 2-year minus the 3-month. This is super short term, and this is telling you, this is showing us that in the short term, people are super worried about the future on the economy. There's something sick on the economy, and a lot of recession fears are starting to appear in these kind of yield curves. Long term, starting to look good, but short term, we are most probably already in a recession, but investors are starting to move the money to the defensive sectors to prepare for next year valuations and earnings that are going to be bad, honestly, and that start preparing those positions. And for the rest of the 2023, they will try to build low positions on super low valuations and a lot of P ratios on these big tech companies. So that's the move that they plan to do, and this is the way you can see that happening. Let's go back to the Nasdaq and end the update. Well, it's not strong enough. At least we are seeing some moves to the upside. We stopped bleeding, but as you can see, Nasdaq still weak. The overall sentiment is still bearish, and don't get caught on this. I'm still watching this trend line. This is a clear downtrend, but at some point we should see a bounce. Where maybe this is some kind of support, maybe we can expect some kind of relief like this, and then finally short sellers start adding around 11,500 and start going lower to check the lows of the year, or at least this base, this low is super important. This is CPI, the previous CPI, not the latest one, the one on the 10th of November. This is what started all this move to the upside consolidation, but we failed 3 times and we rejected on bad economic data and bad fear on recession. So watch out these levels and don't get too confident on a bullish move to the upside. We are not yet there. So as always, thank you for your time. If you found this video useful, please remember to click the like button and subscribe to the channel to receive notifications when I upload new videos. Remember that I upload new videos every single day for market forecast, market updates, and market recaps. I appreciate your time. I hope you had a good day, but remember the trading day is not over yet, and see you in a couple of hours with the market recap. Discipline and risk management are key for your success. Stay safe, everyone.